Our honorable guest of honor today, Shri SUJIT Varma, who is the Deputy Managing Director of State Bank of India. I think I'll be introducing appropriate time, Mr. Varma, when later. And we also have the presence of the Shri Anil Khaitan, our past president, Shri Suman Jyoti Khaitan, our past president, Shri Gopal Jivrajka, Shri Sanjay Bhatia, past president, Shri Jyoti Gadia ji, our co-chairman of the committee, banking committee. And of course, we already have about 225 participants on the Zoom and about 300 people there already on the YouTube. I think slowly as we start the meeting, I think more and more people are going to join us. As we see, because a very large number of people are already registered with us. I welcome, sir, all of you. And I think before moving further, of course, I will now like to request our president, Shri Damodar K. Agrawal ji, to deliver his presidential address. This very important conference on corporate finance, challenges, opportunities, and of course, issues.
Thank you, Jansab. Good afternoon, everyone. On behalf of PhD Chamber of Commerce, its 150,000 members, I extend a very warm welcome to our chief guest, Shri SUJIT Varma, Deputy Managing Director, State Bank of India. Our former presidents, Mr. Gopal Jivrajka ji, Mr. Khaitan, Mr. Anil Khaitan, Suman Khaitan and Anil Khaitan both, and other former presidents whom I cannot see. My colleague, Mr. Sanjay Agarwal, Senior Vice President, Mr. Pradeep Multani, Vice President, Mr. Saurav Sanyal, our Secretary General, our Chairman of Banking Committee, Mr. Vinod Jain, Co-Chair, Mr. Jyoti Prakash Gadia, other delegates and participants. Again, a very warm welcome to each one of you. Well, today we have the Deputy Managing Director of the largest commercial bank of India. When I say the largest commercial bank of India, if I just give you the data, more than 22,000 branches in the country, presence in almost 36 countries of the world, more than 250,000 employees, 49 crore plus banking customers, 32 lakh crore, more than that, of the deposits, and 23 lakh crore plus advances. It is truly a banker to every Indian. This is one of the punchline, and this absolutely justifies when we see 49 crore plus banking customers. The nation banks owners, again a very appropriate punchline, a bank of the common man, with you all the way, pure banking, nothing else. I think all these describe State Bank of India in a very apt manner. We are very happy to have the Deputy Managing Director of SBI, the largest bank of India, and I'm sure that today the interaction which we would have, we would benefit substantially. If I talk about State Bank of India, you know, it has been always supportive to the nation, always taking lead. It was the first bank to make sure that recently, like there was a repo rate cut of 40 basis points. It was the first bank to make sure that these 40 basis points are passed on to the benefit of borrowers, at least in all those loans which are linked to external benchmark or repo rate. It was also, if I give you the figure, under this 3 lakh crore collateral free, this facility which has been given under this guaranteed emergency credit line. So far, 701 crore has been sanctioned by SBI, and the total amount so far sanctioned by all the banks put together is 17,705 crore under this facility. So more than 50% sanction has been from SBI alone. Similarly, the disbursal has been more than 6,000 crore out of total disbursal of 8,320 crore by all the banks put together under this 3 lakh crore collateral-free facility. It was also one of the first to start when this COVID thing started, and all the corporates and other borrowers, they were facing difficulty. Of its own, on a proactive basis, it started this COVID emergency helpline, COVID emergency credit line, and it benefited many of the organizations substantially. Well, I should come to today's topic. What are the issues which are being faced by the industry? I'll take up some of the issues because we have a question answer session, and I'm sure that there would be number of issues, number of problems being faced by the stakeholders, by the borrowers, by the corporates, which they will talk about. But some of the things which I would like to talk here, which are very generalized and which are very important. As I said, this 40 basis points cut in repo rates, it has been passed on by State Bank of India on a proactive basis. However, most of the loans are based on MCLR. And in case of this marginal cost of lending, that is the basis on which these loans have been given. And generally, the rate changes only when the set-in takes place. When this set-in takes place, only then the rate changes. So for any borrower, the benefit would happen only when that set-in date comes in. And generally, it is 6 months, depending on the loan, particular individual case. It ranges from 6 months to 1 year, the set-in period. So there could be a case where the set-in period would fall after 1 year. So those borrowers would not get the benefit, whereas the intended benefit by RBI to cut this repo rate was that the people can take benefit immediately. So our request would be even the loans where this which are based on MCLR, even they should be extended the benefit of this repo rate cut, which has been to the extent of 2.5% in last 1 year, 135 basis points in 2019 and 115 basis points this year. In all, 250 basis points rate cut has been there. So out of 135 which happened last year, only 45 basis point has been passed on. So there is a lot of interest rate cut has to happen, particularly in case of MCLR based rates. Sectors which have been affected the most: automobile, real estate, aviation, hotels, hospitality, tourism. These sectors, as we all know, that even this 20.97 lakh crore package which was given by the government, there is not much for these worst affected sectors. And these are the sectors which need the financial assistance the most. But right now there is even the 3 lakh crore does not cover these, many of these corporates whose turnover would be more than 100 crore. So something has to be done for those sectors. So we would request, because these are the sectors where the funding is not coming and they are in need of their funding at these days to meet their expenses, to continue their operations. Otherwise, there is a fear of that they will be closing down. So something has to be done for them, and we would request State Bank of India, which is in a position, because it is not any other issue. It is because of COVID-19 that these people, these corporates are facing difficulties. Third is one-time restructuring. Like we know that in 2008, one-time restructuring was done without their being classified as substandard. They continue to be classified as standard loan account. So though we had requested our government to do this, we have requested the RBI also. However, so far that request has not been accepted. So we, of course, one that we would request even State Bank, because they are also a very significant stakeholder, and it is also for their benefit, because otherwise there would be a risk of classifying many good units as NPA. So we would request even SBI to approach or use their good office to make sure that this one-time restructuring is allowed. And even if it is not allowed, because there are always ways of doing the things, corporate loan can be sanctioned by SBI to these entities which are otherwise good only because of COVID-19 effect, they are finding it difficult to survive. So if at these times, if corporate loan can be sanctioned to them, which can take care of their these needs, I'm sure that this would be a big help and big boost to these sectors. Another thing which is there is a lot of skepticism and a lot of apprehension in the industry, that now when the rating agencies, they do the rating, because it is certain that most of the companies, their rating would get downgraded. So we would request the banks, particularly State Bank of India, to not to give effect to these rating downgrades, because these are not because of any other thing, but because of the COVID effect, which is a one-time phenomena, which is an unprecedented situation. Of course, we are representing to SEBI. You are also representing to RBI. However, since you are a very large bank and you can take those decisions, so right now we would request not to give effect to these rating downgrades and not to reduce the limits. Rather, they would be looking for even more limits. One very important thing on ground level, if let us say any organization had a turnover of 1,000 crore and they were enjoying a working capital facility of 150 crore. Now this post-COVID, or not post-COVID, now say post this unlocking, say phase 1. Now when we are into this stage, we are sure that the turnovers are going to go down and the working requirement is going to go up. If the turnover was 1,000 crore in last year, this year maybe the turnover would be 800 crore, and the requirement of working capital in place of 150 crore would be 200 crore. So there is a risk that when the reassessment is being done, instead of because as per the reassessment, the various parameters, various norms which are applied for DPs, as per that, even their existing limits would come down. But as I said that now there's a need of even higher limits. So we have to change those norms. We have to give those relaxations while calculating DPs, and we have to duly factor in the COVID-19 impact, and so that on ground level, practical difficulties, the corporates do not suffer and they are able to survive these bad times. Similarly, in case of consortium, when the reassessment happens of the working capital limits, right now, most of the private sector banks, they are not disbursing. They are very scared, or they are very they have become very risk averse. We know for SBI, they are not risk averse. They are in fact, one of the statement by your managing director was that we want borrowers. We have a lot of money, but we want to get the borrowers who want to take money. So I would request you that in those cases of consortium where private banks are not taking their share, their quota of limits, you step in, you take over even their quota. Don't wait for the closing down of the consortium, the closing down of all those banks, private banks, to take over their quota. Instead, you step in and take over even their quota, so that the working of the corporates are not getting affected. Then this 10%, which was automatic increase announced by the finance minister in the first package when she announced the moratorium and other things. She also said 10% automatic increase in the working capital limits. State Bank on a proactive basis did it as always a leader in all these things. However, the non-fund based limits, they were not increased by 10%. So we would request even to increase those limits by 10%. Well, I will not take much time. I know these are few things which I talked about. There would be many other issues, many other ground level difficulties being faced by our corporates. But I am very sure that today, in your presence, I am sure that they would be able to vent their concerns. And I am very, very confident you being here, you will be taking very corrective actions. And we are very thankful to you for coming here. With these words, I close here, welcoming you again and all the participants today. Thank you very much.
Thank you, Shri D.K. Agrawal ji. I would now like to invite our Senior Vice President, Shri Sanjay Agrawal. Shri Sanjay Agrawal ji will make a special address. Mr. Agrawal, sir.
Thank you, Mr. Jain. Good afternoon, everybody. Shri SUJIT VARMA ji, Deputy Managing Director, Corporate Accounts Group, State Bank of India. Dr. D.K. Agrawal, President, PHD Chamber of Commerce. Mr. Vinod Jain, Chairman, BFSI Committee, PHD Chamber. Mr. J.B. Gadia, Co-Chair, BFSI Committee, PHD Chamber. Mr. Pradeep Multani, Vice President of PHD Chamber. Mr. Saurabh Sanyal, Secretary General. Our former presidents, Mr. Anil Khaitan, Mr. Gopal Jivrajka, Mr. Suman Khaitan, Mr. Sanjay Bhatia, Mr. Mahesh Gupta. And I'm sorry, these are the former presidents I can see. I might have missed some more. Eminent dignitaries, ladies and gentlemen, very good evening to you all. It's really a privilege for us to be hosting Mr. SUJIT VARMA, the Deputy Managing Director of SBI, the largest bank in our country. By any measure, we must congratulate on behalf of PHD Chamber, the State Bank of India, for having achieved a fourfold jump in their net profit to more than 3,500 crore rupees for Q4 FY 2020, which is an increase of more than 300% over the same quarter last year. I think in these difficult times, to have achieved such a landmark performance is something which deserves a special appreciation and kudos from all of us. It is also appreciable to note that the SBI's asset quality has also improved in the Q4 2020, as the bank reduced its NPAs to 6.15% of total advances in Q4 20 compared to 6.94% in Q3 2020 and 7.53% in Q4 2019. So all this goes to show that even in these difficult times, SBI has been able to maintain its standards and has been able to go on a very steady wicket. So I think our kudos to SBI for this performance. It's also very laudable that SBI has witnessed a growth of over 9% in gross domestic corporate advances, which has increased from 7.7 lakh crores in the quarter ending December to 8.4 lakh crores in the quarter ending March. I think our President DKG just showed us the figures about the 3 lakh crore special dispensation scheme, in which more than 50-60% of the disbursals and sanctions have happened only by SBI. So this is the basic reason why we are seeing this commendable increase in your advances while your NPAs have gone down. We are all, as citizens and as stakeholders in the economy of the country, very happy to see this, sir. One thing I would like to mention is that the numbers DKG has already, our president has already given, but one number probably that was not mentioned was that you have a 22%, SBI has a 22% share in advances and 21% share in deposits in the country, which tells us the actual level of reach and effect of whatever SBI decides to do or decides not to do. So therefore, I think SBI is one of the strongest pillars in our economy, and we are very happy to be having this interaction with you, sir, because of this. As the banking system today is on the cusp of transformation, in light of the recent policy measures to reduce vulnerabilities and financial health, the sector has to now again show the same resilience and strength that the whole financial sector and banking sector showed in the earlier global financial crisis of 2008-9. And we are very sure that the way we are going, all the banks would be joining SBI in maintaining this stance of strength and and support to the trade and industry. I think all the sectors that are affected, which include MSMEs, which include the directly hit sectors like tourism or restaurants or airlines and similar sectors which have a direct bearing on people traveling or people coming out. All those sectors, of course, deserve a special consideration from the banks. We are hoping that the banks would be having some special packages and schemes for these sectors on top of what is required for the normal trade and industry. The one concern that our president, Mr. D.K. Agarwal, also mentioned, which again I would like to stress, is that the cost of borrowing needs to go down dramatically. The repo rates have gone down. We are looking at 4% repo rate and 3.35 or 35% reverse repo. But the weighted average lending rate for the banks still remains at 9.3%, which is something, sir, that we would request SBI to take a lead. And we would request the whole banking sector to consider how to bring down this difference to a manageable level, because the cost of finance is going to be the major determinant of the profitability or otherwise of almost all the businesses in the country. So this is one major concern, sir. The other major concern is that although SBI has been proactive in giving finance to the industry, when we look at the overall numbers, sir, the gross bank credit has gone up from 93 lakh crores in March 20 to 93 lakh crores from 87 lakh crores in March 19. So that's a 7% increase over the one financial year. But the total lending to industry, which includes MSME and large industry, remains flat at roughly 29 lakh crores. There's an increase of just 0.7% at the end of March 20. Now, this is a matter of concern because in the current disturbed situation, all the types of industry, whether it be MSME or large industries, and the specially affected sectors like aviation or hotels or restaurants or tourism, there is definitely a need for much larger credit being made available, sir. So this is the major cause of concern. And on top of that, we see, the reverse repo deposits of the banking sector of around 6.1 crores, 1 lakh crores. This is no time for such huge amounts of money to be lying in reverse repo with the RBI. So this is our concern, that is there a risk aversion which is still to be addressed properly by the banking sector? Is there a situation where there is too much conservatism now, which is definitely something not to be got over now in light of even the government announcements? So these are the factors which we probably need to address much better and strongly. I would not take too much time. I would rather prefer the expert, our chairman of the BFSI committee, to come up with his comments and wait for the question answers to be enlightened further, sir. Thank you so much. Thank you.
Thank you. Thank you very much, Shri Sanjay Agarwalji. And I think before we invite Shri SUJIT VARMA, Deputy Managing Director, State Bank of India, to actually make his keynote address and to explain us what is the future ahead, I'd like to take the opportunity of taking a few points. The primary idea of this meeting, Shri SUJIT VARMA being in charge of corporate accounts group, and primarily all large borrowers, whether they are in consortium or not, are being looked after by the divisions which is controlled by Mr. SUJIT VARMA. And in any case, sir, we look forward to you, as far as policy making is concerned, to meet the vision of the Honorable Prime Minister to take us to $5 trillion economy. We are in difficult times in COVID-19, but at the same time, the government is quite determined to take the growth further, and participation of State Bank of India is going to be very, very important in this process. The most important issue will be availability of money to the people who actually really need it at the right rate, at the right time. The banks have the money. Banks are flush with funds, as we are told that about 8 lakh crores additional have been infused into the system by Reserve Bank of India, various initiatives. Banks are having a lot of money. Banks have been primarily investing money into government securities and others. And even now, it may not be possible to invest in reverse repo. On the other hand, there are borrowers who are possibly not coming forward to borrow in that manner in which they need to come. So I think it is the entire scenario which needs to definitely get improved. There is a sense of a lending averseness also which we see in the system somewhere. We are not talking of State Bank alone. It's not a complaint. I think we are here dealing with a professional. You can, sir, based on your long experience. I know, Shri SUJIT VARMA, sir, you have a huge international experience. You have also worked with the banking division of the Government of India also. And now, of course, looking after the largest portfolio of the State Bank of India. So from that angle, I think it is very important for us to really see which direction we are going. How we can really see that the decision making in the banking sector improves in terms of restructuring, in terms of sanction of new loans, in terms of reschedulements, in terms of one-time settlements. There could be a number of issues which are there, which is coming forward, one after another. And I think this issue need to be sorted out by the chamber with the help of bankers, and also ultimately, of course, with the government. So the bankers, once they come up and take decisions, they don't have any apprehension that they take a decision, it will be actually looked at negatively. I was talking to our senior vice president in the morning that I think there is a need that whenever there is a decision taken by a committee, there should be some kind of a circular. Prime Minister on the one hand is saying that we will not trouble anybody. Everybody is free to take his decisions and really go ahead and sanction loans and disburse loans also. Whatever is done with good intention will not be really looked at. So the word good intention is very good, but how to establish good intention later on when an inquiry letter comes is a question. So I have a suggestion which we like actually you also to further with your good offices. We'll pursue in any case that whenever a decision is taken as a committee, anybody as a participation of a committee, then tomorrow as a committee member or as a committee chairman or as a committee vice chairman, it should not be possible for anybody to really question. At best, you can really require those decisions can be made transparent, little more transparent, but don't question a decision. If you question a decision, then decisions don't happen actually. Sir, we are aware that the fund availability is there. How to make it available, this lending averseness need to go, and banks also has to start taking decisions. The second aspect which is happening is that we see that bankers across are becoming now quite a lot collateral oriented. It is one after another. Government is of course bringing the scheme of doing up to 2 crores and various kind of schemes. The government is coming to guarantee various loans in that process. But without a collateral, it may not be possible to really get a loan sanction. You can provide a collateral for a smaller loan, but the area which is being looked after by you, sir, when you're talking of 1,000 crore, 2,000 crore, 5,000 crores kind of a project or expansion, collaterals are outside the question. Even for 500 crores, providing collateral, if we insist, the project's growth itself may get impacted, sir. Of course, we understand, sir, that you are not directly looking after MSME, but I think a number of members have raised this issue that MSME new schemes which have come, how quickly they can really be made available to a lot of people. And what they say is what has been done for MSME, this 3 lakh crore additional 20%. Similar requirement will be there for larger borrowers. What kind of the thinking process is there at the policy level as to what State Bank and other bankers are going to do as far as the availability of funds is there concerned, or it is going to go through only a detailed process of understanding what is the permissible bank finance? Are we really going to work on that basis? That is the question which is there. Sir, on the interest rate, I'll not like to really mention too much, because already my president as well as my vice president has already mentioned this. I will only like to say that since 2015, the repo rate has come down from 8% to 4%. There is a reduction of 50%. And I think the government is indicating definitely that they really want a low interest rate regime. I think we are also trying to compete with China. We have to compete with the US. So unless we actually reduce our rate, on the other hand, even inflation is also fairly low in last 5 years, 6 years. So I think in that backdrop, it is worth that the repo rate plus 200, 300 basis point outer side, maybe 100 basis point to 300 basis point, if we can really go in that direction with that vision that our interest rates should go in that direction, it will help. And collateral, of course, sir, I've already mentioned to you that collateral, where collateral will be a must, where collateral will not be a must, it is a question of a mindset, because there's a feeling somewhere at the sanctioning authority that if they don't insist on collateral, tomorrow the loan may become bad, and how we will really go further. Sir, whenever there is a financing, there is bound to be a risk. I think so long as there is a good project, the promoter's background is good, I think now insolvency law is there to really take care of very quick recovery. So I think it may be worthwhile to consider without collateral. Even personal guarantees, of course, are being insisted upon. I'll not have anything against personal guarantees. But when it comes to larger loans, insisting on personal guarantees for larger loans may not really mean anything. And, ultimately the promoters who are wanting to implement greenfield projects or even expand in a large way, they feel averse that why to give personal guarantee in the current scenario. Suppose tomorrow anything goes bad, out of my control, then maybe bank will not only lenders may not only take away my unit, but also even all my personal assets will go away. I think we see the US as a comparative scenario. In US, whatever is pledged is pledged, and the bankers and the lenders don't go beyond to the personal assets, even if whether there's no concept really of personal guarantee there in the entire developed world, sir. So, one or two points which are left, I'll not take too much of a time because I think I understand that time is running. So, I'd like to request through your good offices, I think Reserve Bank of India also need to consider that NPA norms need to be revised in this COVID-19 period. And even thereafter, I think this kind of a technical thing that just after 60 days you become, somebody who is completely ineligible to get a loan, and even after 90 days you become NPA, and NPA becomes a bad word. Sir, whenever there is a lending, whenever there is a borrowing, NPAs are bound to happen because businesses will not run as they are projected. So there has to be some methodology in the banking sector that NPA is not seen as a negative word, and that attitude against NPA needs to really go away. We have to really secure ourselves. We have to see things are going in the right direction, whether actions are being taken by promoters in the right direction, money is not being siphoned out, and that the financial management is proper. All these things are there. So we'll also like to have, here you want the State Bank thinking on one-time settlement, or maybe suppose somebody is ready to pay major payments at 25%, then whether his expectation of waiver of penal interest and maybe interest for some period he can really look at. What is the bank thinking in terms of restructuring and reschedulement? And the promoters across the board are looking for that in the insolvency, before going to IBC, a chance, at least one or two chances should be given to the promoters so that they can recover their unit, maybe reschedulement or whatever is really required, because that is bound to happen in projects because business cycles change, sir. And I think last thing I like to mention is that the bank can consider security asset-based funding in a larger way, because if you're there could be another way where adequate security is available, whether the end use the person is explaining or not, and even that corporate funding which earlier was being done, the bank can really look at. And once IBC has been suspended, the Surface I also need to be actually suspended during this period, sir. Surface I and DRT during this COVID-19 defaults. So I think I will like to conclude here my remarks, sir, and we'll come back to you. Various questions are coming to me one after another. I'll come to your questions, and sir, I'll like to now invite you, in fact, for your kind presentation. And before I invite you, I'd like to introduce you, sir. Just give me a minute, sir.
Sure.
Sir, I'd like to introduce Mr. Sujit Varma to this August gathering. Shri SUJIT Varma joined State Bank of India as a professional officer in 1987 and has held various important assignments in the. Mr. Varma is currently posted as Deputy Managing Director, Corporate Account Group since June 2018 and is in charge of the advanced portfolio of all top-rated large corporate accounts. Prior to this, he was in charge of the international operations of the bank across 207 overseas offices in 35 countries. The international operation of SBI has a balance sheet size of $60 billion. He is a career banker and has rich experience in almost all functional areas of banking, inter alia, corporate and international banking, credit administration and branch management, retail banking, etc. He was the Chief Executive Officer of New York branch from 2009 to 2013, where he was credited with significantly scaling up and broad-basing the bank's business. From June 2013 to July 2015, Shri Verma held the position of General Manager Mid-Corporate Mumbai region. In this role, Shri Verma was overseeing a very large and diverse credit portfolio of Indian rupees 250 billion. Shri Verma was also on deputation to Department of Financial Services, Ministry of Finance, Government of India from 2004 to 2009 as the OSD. With more than 3 decades of experience in multiple and very challenging assignments, Mr. Verma has been able to bring a banking vision, professional expertise, strategic direction in his role as a director on board of overseas subsidiaries in Nepal, in Mauritius, in Moscow, in Canada, as well as Indonesia. So I think that is the lucid, we can say, is the versatile personality, Mr. Sujit Verma. I have, ladies and gentlemen, to present before you, Shri Sujit Verma. I heard about him. Our friends are there on your board, sir. When Mr. Saji mentioned, he was talking very high of you, that Mr. Sujit Verma is known as one of the most intelligent, professional banker in the bank. And whenever there are policy issues, whenever there are complex issues, it is Mr. Sujit Verma's advice, which is considered very highly. So we look forward to hear you, Shri Sujit Verma. Sir, Shri Sujit Verma, we actually present to you, Shri Sujit Verma.
So thank you very much for that kind introduction. That seems to be a very long journey, when I look back. And whenever somebody gives that introduction, then that kind of reflects, what long journey you have covered. But at the outset, first thank PhD Chamber and particularly, Dr. Agarwal, Mr. Sanjay Agarwal, Mr. Vinod Jain, Mr. Pradeep Multani, Mr. Sanyal, Mr. Gadia, all the past presidents, all the office bearers, and all the members who have logged in, today. First, let me extend, very warm greetings on behalf of State Bank of India and my, my personal behalf. It's very, a great opportunity for me. And so let me also tell you how it happened. I was having an informal chat with Mr. Sanjay Agarwal just a week back. And then he suggested to me that, would I be willing to have this interaction? I said, I would love to do that. And, I always look forward to such occasions because I, consider this to be an education process. When you get the feedback from the ground level, when you interact with people who are, day in and day out, running industries and running businesses, I don't think there is a better way of getting this feedback and what's happening at the ground level. So the way I intend doing it, that I have said, jotted down some of my, there is a text which I have prepared. So if you permit, I'll first share that with you, and then I have jotted down all the points that all of you have raised, in your when you made your address. So after I have finished my prepared notes, then I will try and cover each one of those points. Okay. And of course, then QA. So I think most of it will get covered in whatever I have prepared. But if anything is left out, I'll definitely make sure that I respond to each one of the points that you have raised. And of course, there'll be a Q&A where I'll be more than happy to take all the, queries and try and address, respond to it to the best of my ability. So first, before I begin, just let me tell you, let us see the context and the background, where we stand today in terms of the pandemic and in terms of the economy. So I would just like to share, the COVID-19 started as a health or a medical crisis, which all of us know. While the health crisis still continues, it has now also taken the shape of a full-blown economic crisis. So, many people time and again, and even today, keep questioning and debating whether the government's, decision to enforce one of the strictest lockdown that has happened anywhere across the globe, whether that was a good decision. I think we need to understand things in the right perspective, and we have to, take a dispassionate and a more unbiased, view about this, and understand how the pandemic's trajectory has played out in our country. We had the first reported coronavirus infection on 30th of January this year. And just before the lockdown on 24th of March, we had, 571 confirmed infected cases. And given our inadequate, poor health infrastructure system and the high population density, the early containment actually was a judicious decision, as most of the experts have, given their opinion, including the BCG, which is very closely advising not just the US government, but also the Indian government, that there was no other way that we would have actually, really had a control on the spread of the infection. So what it did was the containment strategy or the early lockdown strategy, it gave us adequate time, for the government machinery to prepare for hospital beds, testing kits, and other medical supplies, which was very, very critical. You never know, one never knows how this whole thing will play out and whether we are in a position to manage that. So I don't think, it would ever be a good situation where you only bother about economy and don't have any concern about the human lives. So I think that was the priority, that was the key concern, and I think the government got it right. Of course, now we all know that what is the impact of the national lockdown on the economy, and it is actually much more severe, than what was originally estimated by most experts. It is expected that 70% of the economy was actually in a standstill mode during this national lockdown phase. And almost all the scenarios that have come up so far, they suggest that negative growth for FY21, with first estimate being a negative growth of 7.2%. In fact, this is going to be even much more worse than what we have seen post the global financial crisis. And in fact, the World Bank latest report, which has come, I think, yesterday, is now for India. They have projected a contraction of 2.2% in GDP. Another study, by the various global agencies and including the IMF, shows that the global GDP is expected to contract by an unprecedented 4.5% during the year. And of course, we still do not know whether we are nearing a peak or peak is still, some time. I mean, it's really far off. Not really know where we stand in terms of the trajectory of the virus, and when we can actually really get to see the flattening of the curve, as we often hear this term. And while the virus is still spreading, the number of cases still keeps going up, and we have several red zones, and now we have entered into the gradual unlock mode. Now let me sum up what is the major economic impact of the lockdown and all that has happened post that. So the demand, we look at the demand and supply disruption has been witnessed across all sectors. There's been severe financial disruption. The risks of default across various asset classes have gone up. Rising fiscal deficit arising out of significant lower fiscal collections. Divestment targets obviously have not been met now, and not likely to be achieved in the near future. The FDI, the foreign direct inward flows have completely stopped or have considerably slowed down, other than a couple of the things that we have seen. And inward foreign remittances, which are coming from the NRIs, across the globe, that is going to take a major hit, not just now, but I think in the next couple of years. A lot of people, across the globe, particularly the Middle East, because of the falling crude prices, would stand to lose their jobs, and hence the inward remittances, which is one of the major sources of forex, that is going to be adversely affected. We have seen a steep 35% correction in the market indices in the last 6 weeks, since the lockdown. So there's been a huge amount of wealth erosion. The global trade balances, major countries are the epicenters of the virus. And the only silver lining, as we see it for India, is the subdued crude prices. The corporates, continue to see earning losses, and leverage at the high leverage is a key concern. Of course, we've also seen the how the migrant crisis has played out. So daily wage earners and self-employed, more than 400 million people were very, very severely affected post the lockdown. The impact on the industry, can be summed up in the, the following points that I've jotted down. So what we've witnessed post the lockdown, the major impact on the various sectors of the, the economy is a cash flow mismatch and the, severe cash flow disruption because of the, unanticipated and the sudden announcement of the lockdown. Increased working capital requirement. I think some of you mentioned that in your address. Inventory losses because of the write down, to the mark to market of the inventory holdings. Raw material shortage because of the supply disruptions. Collapse in demand across various sectors. Potential cancellation of contracts and orders. Other logistic issues, forex losses because of the huge volatility on the forex. Cost and time overrun of ongoing projects, labor crisis, and of course the overall bearish investor sentiment. And of course, some of you mentioned the sectors which are going to be most adversely affected: aviation, and of course let's also not forget airports, which also is major infrastructure and supports the the airline. Hotel, tourism, restaurants and entertainment, real estate, infrastructure and EPC, and NBFCs. And the financial crisis in some of the sectors like aviation, hotel, travel, tourism is going to be much more prolonged because we are dealing with a very complex situation here. For example, if I talk about airlines, most of their aircrafts are leased. Okay, they are leased by the global international, banks who have investment specialized outfits only to do aircraft leasing. And unless until the lessors decide to stagger or defer the lease payments, we are actually staring at a huge crisis. So we've been talking to all the airlines. Many of them have approached us, and we've also had discussions with the Ministry of Civil Aviation and the Department of Banking. But given our past experience in the aviation sector, you have the example of Kingfisher, you have the example of Jet Airways. The risk appetite of banks to lend to airlines today is extremely low. And today, the airlines have very little security to offer other than their cash flows. And one does not know that how soon can we get back to pre-COVID levels in terms of, people who have started, flying and, all the travel business comes back. So, of course, all that uncertainty is there. And the worst thing is that most of these, companies in these sectors have a very low cash reserve. So their ability to sustain this crisis and tide over this, difficult period is very, very limited. And unless until there is a major rejig in their financial obligations, it will be very difficult for them to, tide over this crisis. Amidst all this crisis and the policy response, both from RBI and the government, has been, I think, relatively prompt and calibrated. And of course, we've seen RBI coming up promptly with the 3-month moratorium on repayments to all borrowers, which was subsequently extended to 6 months after the reassessment of the situation. Working capital relief through the reassessment of limits and margin reduction. In fact, we were the first bank who proactively came out with the COVID emergency line of credit, which was, to extend 10% of the sanction limit immediately to all the, to all the borrowers. And over and above that, also, which of course RBI has also now allowed that provision, is for readjustment of the working capital margins on various items of the, whether it is on raw material, on stock in process, or finished goods or receivables, because obviously the drawing power would have been adversely affected. So all that was done very, very promptly. The challenge that we faced, talking about on the practical aspect, is when you are under a sole banking, all these is very easy to implement very, very promptly, so the borrower gets the benefit, maybe matter of days, if not weeks. The challenge is when you are under a multiple banking or a consortium arrangement. So unless until all banks decide, so even where we were in a multiple banking scenario, we decided to extend it, and we gave time to the companies to get NOCs from the other banks, because security creation would be an issue. And unless until the other banks give the NOC, my security will not be perfected. So of course, on a case-to-case basis, we have extended that benefit as well. The real challenge which we faced was in a consortium banking, where unless until all banks decide to, to implement this together, it is very, very difficult. So we have taken up through IBA as well that can this be done in a time-bound manner, maybe say 30 days. So that message has gone to all the banks, and I think it's now up to the banks to take that proactive decision and implement that. Of course, we've seen the repo rate cut by 100 basis points, so it's now at its lowest level of 4%. Liquidity infusion through reduction in CRR by 100 basis points, which resulted in release of 1,37,000 crore of liquidity in the system. 1 lakh crore of through the TLTRO window. Then subsequently 50,000 crore for NBFCs and MFIs. Major policy measures announced by the government for MSMEs, NBFCs, HFCs, MFIs, power sector through some of the major reform measures covering agriculture, mining, and civil aviation. And so now coming to the what we have witnessed post the lockdown and the economic impact. And of course, I've been personally interacting at a very senior level with all the corporates, all the very senior level, to the level of chairman and the CFOs across all groups. I'm talking about large conglomerates. And if I can share with you what we've witnessed, immediately after the lockdown, that we've seen a trend that all corporates rush to, draw down on the sanctioned credit limits, whether it was undrawn term loans or working capital limits. And we tried to find out that what was the, rationale, or what was the, reason for all this, what was the trigger. And so what we came to know, basically, it was, just, as a measure of abundant precaution, everybody wanted to conserve adequate liquidity. And, so nobody wanted to, and this, because this happened in the last week of March, companies had to make statutory payments and, meet other commitments, maybe because of imports and, other payments, pressing payments. So all of them utilized those limits. But again, when we came to April, and of course, when there is no visibility of demand or how quickly can you ramp up your production, most of the limits actually came back to the level. So we saw exponential credit growth in March, which was missing till even February. The credit growth was very, very subdued. We were, I think, year-on-year growth, including the retail, was just about 6%. And if I talk about corporate, excluding MSMEs, I'm talking about mid-corporate and I'm talking about large corporates, there was actually a year-on-year negative growth. Because what was generally happening, because there was complete lack of fresh investments. So we have a very large project finance division, and so they hardly had any large big ticket investment project with them, which they could have appraised. And all the what was happening primarily was the refinancing. So basically, high cost debt getting refinanced because people wanted to cut down their cost of their borrowing. So that is what was typically being witnessed. And so what we've also seen that as a measure of cost cutting and because of lack of sustained demand post the post this crisis, most of the large corporates that we have interacted with have started taking steps to cut down costs wherever possible. And most of them have deferred their plans for CapEx, other than the ones which are already committed and which are already on. And there again, they will see how they can actually, if there is any scope to reduce the capital expenditure. So that is something which is clear indication that the investment demand is going to be very, very subdued or very, very negative in the foreseeable future. Another major problem or issue that we saw was corporates who were dependent on short-term funding, mainly by way of commercial papers, to meet their working capital requirements. I'm talking about the AAA and the AA corporates. They faced tremendous pressure, because the mutual funds stopped rolling over the CPs, because mutual funds themselves were under pressure because of the the redemption demand. So they faced redemption pressure, and in turn they stopped rolling over the CPs. So most of the corporates who were dependent on CPs, they faced a mismatch, and obviously to avoid a situation of default, they would have to come to banks, and many of them have actually approached. And now the bank's responsibility, of course, on a case-to-case basis, is first, of course, see that the adequate liquidity is provided, timely liquidity, so that there is no default, and also to help them correct the ALM mismatch. So that is the challenge and the dilemma which we bankers face. That how do we assess and how do we kind of take such decisions quickly, because these are all maturities which are coming up in short time. So it's not that we have a luxury of 6 months or 7 months. We have to do it in quick time. So these are some of the discussions which we have been having, and we'll have to see that how in a risk mitigated manner, and we can provide this support. Another significant event that we witnessed, that because of the risk averseness, the pricing across the yields across the system went up significantly, to the extent that many of the corporates who raised money through the TLTRO1 window, TLTRO1, which was of 1 lakh crore, they had to actually accept pricing or yields which were significantly higher. So the spreads had gone up across the board. So a AAA corporate, which was raising funds at say 7.5 or 6.5%, possibly had to pay almost 150 to 100 basis point higher spread to raise funds under TLTRO. Many of them did, realizing that yes, this is a limited liquidity that is available, and to be on the safer side, it is better to raise that liquidity. So we have seen that several corporates, after prolonged discussions, accepted the pricing because they knew that pricing has moved up across the system, and they cannot expect the same pricing to be for banks to now accept. Of course, so one of course general perception which comes up all the time, that banks are increasingly become risk averse. In fact, one of the analysts, or I'm forgetting his name, mentioned the word that the banks have actually moved from being risk averse to being risk phobic, coming from the word phobia. So they said that the banks have no longer risk averse; they've become risk phobic. So the banks have developed that phobia. So it's also true, as you mentioned, that banks today are flush with liquidity. So banks, on an average, are parking 6 to 7 lakh crore through the reverse repo window, because banks do not see any credit offtake. So it's a real contradictory situation, where you have flush with liquidity, there is a credit demand for that's the perception. And as our chairman mentioned, that you tell us that where is the bankable proposal, and we are willing to fund that, and which we keep on saying. So I'll come to that, when we interact in the Q&A, that today what we see, there is no demand for credit from the private sector, okay, other than the working capital. So that's my personal view, that banks, and I'm not just talking about SBI, I'm talking about the banking system, that will have to do prudent lending at this juncture. I mean, we have there is absolutely no choice, and we do not. The banks will have to lend. Have to lend prudently. So I don't think it's it's fair to expect banks to lend recklessly. So I don't think whatever be the perception, I think one accusation that is leveled against all the banks and the bankers, that 2011-12, post the global financial crisis, when the all the stimulus that was provided by the government, banks did reckless lending, which may not really be the case. So I think we will leave it for some some other discussion. So I think we will definitely not go back to that same cycle or scenario again. So as I think I can tell you that SBI, being the largest bank, we are always willing and we are ready to play our part and extend that support, to help the economy and to help the the various industry sectors. We'll continue to do prudent lending, okay, because the bankers and banks have to realize that if they stop taking lending decisions, if they become completely risk averse, even then the credit profile and the NPS will rise, okay. So it's not a choice. I think the bankers sooner or later will have to take that call, and I think that message has gone not just from the government, but it has also gone from IBA. And I hope that things change, and things change for the better. And hopefully banks will be a little more proactive and take decisions, because especially when we talk about large corporates and multiple banking, unless until each bank takes its share and takes it in time, things are not really going to move. So I think that is something, a challenge that we will have to face and find a way to overcome. So what is needed now? So by a couple of this thing, the advice and the interaction that we've been having, and some of the inputs that we have been giving to our corporates is post the as you get back to your resumption of your activity post the lockdown. I think first thing that corporates across, whether it is the MSME or the mid corporate or the large corporate, will have to reevaluate and reassess their business plans, because whatever credit limits you have today or you've got sanctioned from banks was in the pre-COVID scenario when things were completely different. So all the assumptions, all your projections and estimations would have gone haywire. So today you will, all the our advice and suggestion to all the corporates is to reevaluate, reassess your business plans, your cash flows, revised cash flows under the the change scenario, projections, estimates. Some of you mentioned that it would have undergone a change. Key business parameters such as sales, costs, margins, receivables, funding composition of your funding funding mix, and also what we've been suggesting is try and make the best use of the relief package as has been provided by the government and RBI. And I think another feedback that we've been getting and a suggestion that we've been giving is to review and rationalize the cost structure and curtail all non-critical expenditure. So that is something which is very, very important at this stage. Also, what needs to be done is to engage with all the lenders for availing financing support based on the revised business plans, and also on the the revised working capital assessment. Conserving cash and keeping an eye on the leverage is something which is very, very, critical. Of course, one question that repeatedly comes up and in various discussions, I think it was also alluded to by one of the one of you, is whether the moratorium allowed by RBI, first for 3 months and then 6 months, is alone going to be enough to take care of the problem. So while all of us, strongly believe that this may not be adequate given the crisis that we are dealing with, but I think one thing that we have to appreciate and realize that the impact of COVID-19, as we see it today, the pandemic, that itself is a moving target. Nobody knows for sure or for certain, nobody is certain that how this will play out, when this is going to end. Okay, so best of the health experts in the country and globally have different assumptions, have different projections. Some say that we are already nearing the peak. Some say the peak is still some time away, could come in July. Sometimes some people talk about September. So I think to be fair to RBI, we have to realize that this is a moving target. One really doesn't know what is going to be the worst case impact. And to expect RBI to come up with all its measures in one go, I think it's not fair. So my personal view that RBI will wait and watch, will see how things play out. And if it comes to that one-time deep restructuring is the only option which is going to take care of the problem, is going to resolve the problem in the long run, I don't think RBI will hesitate to take that step. But yes, given the choice, because RBI did has taken a lot of efforts in the last few years to actually address restore the credit culture. So I think this is something which they may not like to do out of choice, but rather by compulsion. But the suggestion and recommendation which has gone from IBA, which has gone from different levels, at one time deep restructuring, I think is something that will have to be provided. We only have to be patient and wait and watch, wait and see when RBI really comes up with this. And of course, banks will only consider this when RBI allows it, with the dispensation appearance that the asset quality will not be downgraded. Unfortunately, what we see today is most of the red zones are the places or the locations where most of the economic activities happen. So most of the the major part of the GDP contribution comes from the zones or the areas which are under lockdown or which are the red zones. So that is something is a huge concern. And another way that SBI is looking at it when we talk about restructuring, or the suggestion that we are giving, is to differentiate and on the basis that companies which were absolutely current in their servicing their debt obligations till February and have been affected, adversely only because of COVID-19, I think they are the ones who absolutely deserve to be supported and to be given that option. So I think we have to be careful when we raise this demand. Is we shouldn't be seen to be companies which were already stressed also being given. I think this is something which RBI is really worried about. That we shouldn't try and kind of under the garb of providing this relief to everyone, we also extend it to the companies which even without COVID would have slipped. I think we have to be very, very mindful when we raise this demand or make this request to RBI. So I think in SBI, this is this is our thought process that we will differentiate, and we will definitely extend all support to companies pre-COVID who were in a relatively better position and current in servicing. So of course, given the situation, every crisis offers an opportunity, and I think it is incumbent upon all stakeholders, across the spectrum, to effectively utilize any opportunity that arises post COVID-19. The government should use this opportunity to initiate policy reforms in the areas of land, labor, capital, and enterprise. The government has already indicated its intent by announcing some of the long overdue reforms in mining and power sector. Land and labor reforms are very, very crucial. Some indication has come even in these areas for attracting foreign investments. We will have to wait and see, whether the international pressure which is mounting on China post their handling of the pandemic and the concentration of global supply chains, which currently is in China. We see some global players planning to move out and set up plants in other countries, and we definitely see this as an opportunity. But we also have to bear in mind that there is also a huge rising nationalism and protectionism that is kind of undercurrent, which is playing out in various countries, major economies. However, if global companies are willing to invest in India, then we must be ready with the enabling framework that allows them smooth entry and ensures that they are up and running in a reasonable time. So before I kind of come to the close of my this thing, I'm actually tempted to quote what one of the very recently one of the chairman of a very large conglomerate, domestic conglomerate, I'll not take the name. He said when we interacted. So what we've been doing over the last few weeks, now that there is no pressure to travel, and we have much more time on hand, is we've been using this all these virtual platforms to interact with all the corporate CEOs, chairmen, and the CFOs. So one of the we asked one of the the chairman of one of the very large corporate houses that how he sees this crisis and how is he preparing for the future. And I really liked the term that he used. And he said, we are using this phase apart from all the other things in terms of cost cutting, rationalization, redrawing the the business strategy and the business plan. He said we are using this phase, and it is across his group, to sharpen the saw. Okay, so I hope I think all of you understand this term. Is we use this period to sharpen our saw, so that whenever the economic revival happens, we are well positioned to effectively capitalize on the opportunities that arise. So amidst all the chaos and the negativity, I think it is important for all of us to be optimistic and not to lose hope. And I think one thing that everybody questions, and generally the discussion goes around, what is that one thing which will reverse and change the sentiment? I think it's a no-brainer. It's the development of a vaccine. I think the sooner a vaccine is found to deal with this, the crisis, the virus, I think that is what is going to be the tipping point, and what is going to reverse the sentiments, and the positive sentiments will kind of be infused in the system. So what we've also been seeing, at an unprecedented level, the pharma companies and the medical research institutes are collaborating like never before to develop a vaccine. However, realistically, I was actually interacting. So I was in a program in Harvard in February, in Boston, just before all these things happened. So we were interacting with the Novartis CEO. So very interesting feedback what he gave is, so whether it was SARS or whether it was, MERS and all the swine flu, he says, any vaccine cannot be developed in less than at least 18 months to 24 months. So at least, 1.5 to 2 years is what it takes, in normal circumstances. And he says, by the time we actually develop a vaccine, this pandemic threat would have possibly been, would have receded or would have gone away. So commercially, for a pharma company to develop a vaccine for the next pandemic, I don't think they say it's realistic or practical for them to do that. So that is where he said that it is the governments across the globe must actually, develop and fight on this thing and prepare for the future. So I think vaccine could possibly be some time away, and because of the way the collaboration is happening, possibly if in the best case scenario, we may take another 6 months, for a vaccine to be really be on the horizon. So of course, as we enter the lockdown phase, I think one hopes that there is a lot of pent-up demand, and of course the good monsoon and the a good rural economy, rural consumption is what is going to drive the economy. So what is lost in terms of the GDP, is lost, which is not going to come back. So we'll have to see in the remaining, 3 quarters, what are we going to kind of, claw. We also have to realize that the government has very limited fiscal space, unlike what it had post the global financial crisis, to spend, its way out of the crisis. The following corporate earnings, these are going to be major constraints on the investment-led recovery. And India typically has been in a consumption-led recovery. And what we have to actually hope for, that the non-durable consumption. So I think what is first going to really, happen more quickly is the essential consumption. But what is going to actually really drive the economy is the non-durable consumption, which is the discretionary spending, which I think, which all of us are of the view is some time away, because people in difficult times actually try to not to dip into their savings. They actually try to, preserve their savings for difficult times. And till such time, they are kind of, relatively confident that their jobs and incomes are secure. I think till that time, the discretionary spending will absolutely, be subdued. So I think amidst all the, crisis and the negativity, I think we only have to, prepare ourselves, make ourselves, our companies and our balance sheets more resilient for the future. And I think we'll have to collaborate and collectively be prepared to face, whatever challenges we are going through. But I am hopeful, being the holding the position of, as the vertical head of the large corporates, the sense that I'm getting during my interaction, that yes, while there is a crisis on hand, there is no denying that. But post the crisis, there'll be opportunities. I think as a country, we have a lot of positive attributes. We have those those strengths, and I think if we stay together, we stay united, and I think if all stakeholders play their part, there is no reason why we will not emerge stronger from this crisis. So I think this is what the points that I jotted down. So if you want to take the Q&A now, do the Q&A now. Otherwise, I will respond to the points that was raised. So I leave it to you to, whichever way you would like to do it. So I'll be more.
I think, sir, first you can respond to the points already raised.
Yeah.
Then
Sure.
we'll have
Thereafter,
some limits.
I think that's the better way to do it, so that
Yeah.
So I think first, Dr. Agarwal, I think you mentioned about the reset date. So when the MCLR, is revised, the reset date, banks only apply it on the reset date. So I think that is the globally accepted norm. That whether you have chosen a 1-month MCLR or a 3-month MCLR or 6-month MCLR, and it's very difficult for banks to implement it, in their IT systems. So the reset will only happen on the date MCLR that you have chosen. So if you have opted for a 1-month MCLR, then the next date of reset will be the first month of the anniversary date, as we call it. So unfortunately, this is how the LIBOR reset happens across the universe. So I think that this is something we will have to live with it. And so for 1 month MCLR, so in a falling interest rate scenario, people generally go for a short-term benchmark so that they take benefit of the reset. But in a rising interest rate scenario, you already generally opt for a longer duration MCLR benchmark so that your reset doesn't happen that frequently. So I think this is something I don't think whether RBI or any bank can do anything about it. So this is something that we'll have to live with. You talked about some of the sectors which will be worst hit: aviation, real estate, hospitality. I talked about the airlines, the challenges that banks will face, and so airlines have, even their cash flows today cannot be escrowed to banks. Okay, I think let me also respond. Some of you, mentioned the point about collateral. So I think banks today, if the business is inherently strong, viable, banks have more comfort in if there are visible and sustainable, stable cash flows rather than the collateral. Okay, collateral banks have to fall back upon only if that there is a default, or there is a if the loan becomes bad. But I think essentially what banks today look for is the visibility of cash flows. I think the cash flows are much more reliable and dependent, whether it is we talk about MSME. And if your business model is good, strong, and your cash flows position and your visibility of cash flow is strong, I don't think collateral is something which is going to be really a criteria. Okay, but of course it may depend, approach may differ from banks to banks, and I think first thing, of course, is the primary focus is on the business more than the collateral. So at least in SBI, we don't see collateral. Collateral we only see in businesses which is high risk. For example, trading business, maybe in the gems and jewelry, diamond business, possibly there, because given the inherent risks in the business, possibly banks may ask for some collateral, but it's not something which is the only criteria for lending. One-time restructuring, I already mentioned about it, and if there is anything, I'll be more than happy to respond. Cost of borrowing, of course, the MCLR, if you see, while RBI has cut the repo rate, at least SBI has taken the lead in, slashing its MCLR rate. Even yesterday, we announced a 25 basis point cut in our MCLR. So our 1 year MCLR today is at 700 basis points, which of course is the lowest. Now the challenge in further cutting the rates is, you also have to see that if I reprice my, on the asset side, I also need to reprice my liabilities. Okay, so you see today that the savings bank interest rate is 2.75%. So if I have to further lower the interest rate, cost of my funds, I also have to see, I have to also slash interest rate on my liabilities. So now there is very limited space. Now today you see, for people who are dependent on their pension, for them actually the real rate of return is actually negative. So the savings bank, if they have parked majority of their savings in the savings bank account, today they are actually earning a negative return, which is lower than the inflation. So that is a challenge that banks have, that unless until there is enough space to cut down the the liability interest rate, there is very limited scope to further cut down on the cost of the on the borrowings or on the lending rate for that matter. So I think this is something, a challenge which most banks face, and given the limited headroom on cutting down the interest rate on the liabilities. On the you mentioned about the rating agencies. Rating downgrades will happen, and as per the one of the CRISIL presentation that I was part of, they said that this year there'll be more rating downgrades than the rating upgrades. Okay, which is bound to happen given what we have seen. And so that, I mean, banks, there is no choice for the banks. They will have to actually go by the ECR, which is the rating agencies come out with, because banks capital adequacy, the capital that they provide is linked to the external rating. So if it's a AAA rated corporate, I provide 20% the risk weight. If it's AA, then I provide 30% and 50% for A rated, and 100% and 150%. So unless until RBI changes that guideline, banks absolutely have, there is no provision for banks to say that we are not going to, reckon the external ratings. Okay. On the working capital reassessment, I think that there is absolutely nothing which stops from the working capital being reassessed based on your revised turnover estimates. The NPA norms, of course, this is within the remit. This is not within the remit of the banks. So this is something which is in the purview of the central bank, and I don't think they would be too keen or willing to do this. While they may look at other things, but changing NPA norms, because that is the the Basel framework. So I don't think they have any kind of leeway or option there. I talked about NFB limits again. You talked about something mentioned that the NFB limits were not covered. So of course, while most of us believe that what is the immediate requirement is the fund-based requirement, but if you feel that as a part of your working capital assessment, NFB is equally critical for running your operations, I think this is something that you can take up with your lenders, and I don't see any reason why lenders would not be okay. Somebody mentioned about IBC and SARFAESI. So of course, IBC has already been deferred for a year. SARFAESI is something, of course, which I think the government will have to come out with, the enabling provisions. So I think as banks, possibly, if you can give this suggestion to IBA, possibly then IBA can take up with the DFS and the concerned ministry, because these guidelines can only be revised by the government, who has come up with the legislative framework. So I think these are some of the points that I've noted down, and if I have not been able to cover some of them, then I think in the Q&A I'll try and respond to those.
Very comprehensively covered, sir.
Our past president to sir.
Yeah, please.
Gopalji.
Good evening, Mr. Verma. Pleasure interacting with you and listening to you. Sir, our company has been banking with State Bank for last 43 years. I have some suggestions and some clarification.
Sure.
Sir, as the first circular that was issued by your bank regarding this emergency credit lines, you gave power up to 3 crores to AGMs. But the problem is, if the margin setting has to be done again, then it needs to go to the GM. So effectively, the whole process is meandering. And if it would be better if you would give some power to the AGM on the margin side also. Because 3 crores, below 3 crores are not large amounts. And it is so our company has been struggling now for 70 days, even though we have a sanction letter to get the money released, because it has gone back in the process of approval.
Okay.
The second suggestion I have is that in your scheme of LAP, sir, you cover only residential and commercial properties. I think at this point of time, it will not be a bad idea if people can move and take some, LAP rather than just borrowing working capital against industrial land also. So my third suggestion would be that the banks definitely should reconsider the processing fees. Especially SBI, sir, as a lead banker, has doubled the lead bank charges this year. So I think you should reconsider and roll it back to the previous charges. And final clarification, sir, yesterday we had an interaction with the Honorable Finance Minister, where a proposal was made to her that since the MSME limit, the turnover has been raised to 250 crores, then that limit of 100 crores turnover for the MSME loan sanction should also be increased to 250 crores. What she said is that that loan is for every enterprise, including MSMEs. So there is no need to revise that turnover limit of 100 crores to 250 crores. I just like your view, sir. Is that the understanding of SBI also?
Okay. So can I respond now?
Yes, sir.
Yeah.
I think on the
Sir, you can respond, sir. Verma, sir, you can respond, sir.
point that you mentioned about MSME. So honestly, I'll have to check with the concerned, BU and then come back. Okay. So I think you'll have to, just give me some time. but I want to be sure, when I give some information, I need to be absolutely correct. So I'll make a note of it, and offline I'll come back to you on this. Okay. So I'll go in the reverse order on the processing fees and the lead bank charges. So I assume this was done pre-COVID.
Yes, sir.
Okay. So I think on a case-to-case basis, we will have to look at, because there are certain other parameters which we look at. So obviously, if there is a very strong justification, I don't see any reason why SBI will not be open to consider this. On the LAP, I'll tell you. You mentioned about the LAP to cover the industrial this thing. I think RBI doesn't permit. RBI doesn't permit banks to do a LAP where there is no cash flow. So but that is the challenge. So that typically, if you see, most of the LAP is being done by the NBFCs. Okay. So residential, commercial, I think only when there are certain cash flows, visible cash flows, attached with the project, there only we do LAP. Because pure LAP, that is why banks are not permitted by RBI to do it, because they see as a speculative that you are allowing the borrower, the company, to hold that the land parcel for appreciation. So that is something which RBI doesn't allow. And on the the delay that you mentioned about the relaxation of margins, but even in my case, I have done it on the same day. So I want to understand that if it were with the powers were with the committee, I can understand that there could have been some potential delays. But if the powers to relax the readjust the margin is with the GM or it should happen on the same day. I can tell you one of the largest auto manufacturers here. I have done it on the same day, and then advise the other consortium banks that this is what we have done to allow higher DP. So I'm surprised that the GM. If there was any delay, so it should have. Absolutely, there shouldn't have been any delay. As long as the discretion is with an individual, it should happen on the same day in today's time. So if I put up a note today, I get an approval from my chairman, even without putting up a piece of paper. So I'm surprised that. So I will be, good if you have flagged this issue. If you want, I can take up. So I don't know how much time it took for you to get a decision on this.
Sir, I don't have the decision yet, sir.
No, but if it's with the GM, have you spoken to the GM?
So that is not the process. It's the branch which is normally following up with the GM. So we don't have access.
Point is, if the branch is convinced that the margin relaxation that you have requested is justified, they only have to just recommend and put it up to the GM. I'm telling you, I have done it on the same day.
So they have recommended it, sir.
So I think if you can offline maybe share the details.
Okay, sir. Okay, I will not take time of everybody on that. Thank you.
No. So what I'm saying, offline, please let me know. Okay.
Yeah.
The idea was that this has to be available promptly, without any delay. And that is.
Sir, I would suggest if you can give us somebody to coordinate from your side, we can coordinate. There are a number of individual issues which are going to come, which are coming to us.
I'll give you.
If you can give us some coordinating senior officer, maybe GM or somebody.
Sure. In each of the vertical, whether SME, MCG, or the large corporate, I can give you a nodal contact point.
Yeah, two, three nodal, respective nodal officers in every area. Sir.
But even then, if you find it difficult to navigate, you can reach out to me.
Sure.
Yes, sir. Yes.
Okay. Perfect.
Sure.
I think next I'll request Mr. Suman Jyoti Khaitan. Mr. Suman Jyoti Khaitan.
Unmute, please.
Unmute yourself. Unmute him. Babita ji,
You
please
can
ensure
unmute.
that
Yeah.
Please
Can
unmute.
you hear me?
unmute done. Go ahead,
So
Suman.
thank you, Mr. Verma, for a very comprehensive and a frank presentation. And of course, we know our limitations. You are not the regulator, but still, depending upon the circumstances, we have to do the best we can. And I think the vital point is, of course, being a banker, you have your norms, you have to follow your norms. But somewhere along the line, we'll have to create employment and we'll have to give a big boost to MSME. Otherwise, we might be, I don't want to sound pessimistic, we might be facing a future which is going to be far more difficult than what we are living today. Already petty crimes are increasing. And of course, lockout has to be opened up slowly because we don't want too many casualties also. And of course, as a banker, I would again say, you have your limitations, you have to see the finance, you have to see the accounting. But somewhere you have to take a broader picture that these are not the normal times. So your normal ratios and your normal rate of return, etc., may not be suitable, at least for the next 12 months. That's
True. Yeah.
No,
No, so,
Can I?
yeah.
Yes, sir. Kindly go ahead, sir.
So can I respond?
Yes, sir. Yes, sir.
Yeah.
Yes.
So as far as the MSME segment is concerned, immediately after the guidelines were finalized by the government under that that 3 lakh crore guaranteed the framework, we proactively sent out, we identified all the eligible MSME customers, and we have proactively sent out pre-sanctioned pre-approved sanction letter to corporates covering 30,000 crore of limits. Okay. And now all that the MSME customers have to do is to go to their branch or maybe talk to the concerned the official and complete the documentation process, which can even be done online. And or best maybe they have to visit the branch once, and then that limit is immediately available to them. We have already, till the last reported number, we have disbursed 10,000 crore. Okay. So I think the message is very, very clear from the government, and we have already sent out sanction letters. It is there for the taking, and 30,000 crore technically can disburse in a matter of next few weeks. Okay. So the MSME customers today cannot complain that they are short on working capital. So that is available. Okay. So we are going to take full advantage of the dispensation or this thing that has been provided by the government. And so I, of course, agree with you that, yes, employment is a big concern. It is 15 years low numbers that we are seeing. And unless until, new employment opportunities are created, which can only be done when the economy starts looking up. But I think these measures, the MSME and the construction, I think real estate is another very, very vital sector, which is a very large, employment generator. So once activity starts on the real estate sector, it's a residential, commercial space, is when you see a lot of these migrant workers coming back. I think one also has to realize that today, out of scare, out of panic, most of these migrants have gone back to their villages. But how long can they sustain without any savings, without any sustainable incomes? They have families to support. I think sooner or later, all of them, there will be a reverse migration. People will come back, but they'll only come back when this scare completely, considerably comes down of the virus, and also, when they see that, yes, once they get back, they can get, meaningful, employment and incomes. So I think it is going to be a matter of time. It is going to be a tough situation for the next 6 months. But one hopes with, all that. So I think let me also, mention that I don't think the government has come up with their last thing on this. So despite the limitation, I think there are certain more you can expect from the government to come in the form of direct fiscal support. Right now, whatever has come is mostly through the guarantees and the other means. So I think there is some firepower which is still with them, which possibly they may come up at a later stage. So I think we'll have to just be a bit patient, despite their limited fiscal space. I think the government realizes that because most of the economic recoveries happen through government-led investments, and then the private sector investment follows. So I think we have to be just remain hopeful. And I know these are real issues, of crime rate going up when people do not have jobs, and these are real concerns for the society. And so one hopes that the situation doesn't get out of hand, or doesn't become that worse. So I think all of us have a very important role to play in that. We have to realize that what is the big picture and what damage it can cause, not just to the economy but to the society at large.
Thank you very much, Verma sir. I think now I would request, questions can be done. You can, sir, take a note and reply in one go, because because the time is very constrained.
So if anything which I have not covered,
Sanjay Bhatia, our past president, to kindly make his point, sir. Mr. Sanjay Bhatia, sir.
Yeah, thank you, Mr. Jain. Sir, let me join my other colleagues in complimenting you for excellent presentation, and your understanding, of course, of the banking is there, but of the business also. I think that's something which is very, very creditable. and appreciable. Sir, my only points I think I have is, one is the deferment of the term loan installment and interest. You mentioned about it, for 3 months initially and later on 6 months. But I think 6 months has not yet come. I think it's only 3 months which has been conveyed to the client, sir. So that needs to be looked into. Secondly, sir, the additional limits which are there for this 10% additional limit, what is being talked is that if this can come in the shape of WCTL, I mean working capital term loan rather than just working capital, because I think the industry needs it for a longer period, especially SMEs and I'm not talking MSMEs, but SMEs maybe up to turnover up to 300, 500 crores or something like that. That is what is really required. Third, sir, is the issue today is that we are not able to avail the additional limits, is that there's required DP is not there. I mean, why DP is not there? Because of the holding period of stocks or delayed receivables, etc. I think that is something which needs to be addressed, sir, unless and until that is, I mean, I have a limit, but I don't have a DP. Or if I want additional limits, but I do not have a DP. So that is something which, sir, needs to be addressed. Either reduce my margin and give me so that I'm able to avail it, or extend my holding period of stocks or debtors. I think something needs to be done so that the industry, the liquidity is available to the industry. It should not be linked to DP. That is the main point.
Okay.
Just the last point, sir, is the against the letter of credits wherever they are opened. I think the bank insists for the original documents, but keeping in mind for the negotiations. But keeping in mind that there's a curfew and the containment zones are there, the scanned documents should be acceptable, and the negotiating bank should convey the acceptance based on the scanned documents. I think this is what the procedure, but I thought these are some important things. Thank you, sir.
I'll request Mr. Pradeep Multani now, our Vice President, to make his point.
Thank you very much, Ji. I hope I can be heard.
Yeah, absolutely.
Yes, sir, you are very clear. Yeah.
Yeah. Thank you. Mr. Sujit Varma, one has the greatest respect for SBI, because this is I think the only bank which has been forwarding the rate cuts which have been issued by SBI, RBI to its customers. There are, firstly, since I come from the healthcare sector, I would just like to say that 80% of the APIs are being imported from China. And these can be very, very easily made in India if the Indian industry is given a level playing field. The rate of interest in China is 1 to 2, the rate of interest is 7 to 8%. Now, these are APIs are terms where the whole margin is 5 to 6%. Now, if India, our Indian government wants industry to set up API plants, but if we do not get these sort of competitive interest rates, the Indian industry will not be able to survive and set up these industries of APIs. And like I said, India needs to stand on its feet at the earliest. This was the one issue. Second issue, so there are many companies which have a very, very strong top line, bottom line, and excellent cash flows. Some banks, I would not like to name them, with whom one has got track record of maybe 35, 50 years, they still insist on the personal guarantees, of the, and also they are heavy holding 5 times the limits you are having. What is the SBI policy on that? Because one is quite sick and tired, because one feels that in today's day and date, where we need to be very liberal to lend to MSMEs and other units, it is important. So can you hear me? Yeah, no,
I missed out the last
point. It is very important to be,
I missed out, if you can repeat, I missed out the last point that you mentioned, about the limits. I think you was talking about some 5 times the limit. Yeah. I couldn't, pick up what you mentioned.
So what is happening is some of the bankers, even in today's day and date, nationalized banks, If you have assets worth 100 crores, then you want a limit of 20 crores. They want to mortgage the full 100 crores. They also want co-lat the directors. Now, this is the pathetic, if I may use the term, attitude of the bankers even today. Now, fed up with them, one would like to shift to SBI. So what is the policy of SBI in such sort of cases?
Yeah. Sure.
So could you hear me, sir?
Yeah, I
can
request.
Shri Anil Khitan. Sir, Shri Anil
Khitan. Good evening, sir.
Yeah, very good evening.
So first of all, sir, could you tell us when would your YONO application be alive? So, sitting in office, we can open a letter of credit.
Yes.
That was question number one. My question number two was, sir, that the CECL limit, which you had given pre-lockdown on your own, do you have any plans to reconsider the repayment schedules afresh? And my last question, sir, you mentioned about cash flows versus collateral. So is State Bank thinking of assessing the financing requirements based on expected cash flows and moving away from traditional forms of assessment? So these are my three specific questions, sir. Thank you.
Okay. Thank you.
Right, sir. Sir, I have some more questions which have come from, I think, Dr. Mahesh Gupta. Is he around?
Yes, sir. Mahesh Gupta ji is there.
So, Dr. Mahesh Gupta would like to say something, sir?
Dr. Mahesh Gupta is our former president and is CMD Kantaro.
Kantaro.
Namaskar, Sujit Varma ji. Thank you for excellent presentation.
Thank you very much.
My point is from the side of customers who have good deposits with you. Even like Chamber has the deposits, and our operation is based on the income from deposits, right? In the Chamber. And there are many people whose income is based on deposits. Now, whenever deposits are maturing, you are saying our interest rate is 5%, 5.1%, 5.2%. But unfortunately, you are saying your FDR has to be below 2 CR. If it is above 2 CR, you are giving only 3% interest rates, whereas your repo rate is 4% with the RBI. It's very surprising that there's such a wide gap has been created in the value of the FDRs. So I would suggest that from 5% you can come down, but you can't come down below the repo rate. So what's the reason behind this, and can this be corrected? This is my request. Thank you.
I think I have a request from one Mr. Atul Anand. Can you unmute Mr. Atul Anand? We cannot see him here on the panel. Mr. Atul, will you like to make a point? You can be unmuted by the system. Babita ji, can you ensure, please?
I'm just checking, sir. I'm just checking if
he has come. Atul has come.
Okay.
Atul, go ahead.
Sir, my primary question I have already included in the. So my request is that as an MSME company, there is a concept which has come up that will be an auto update of the existing term loans with the company. But what happens to a company which is an MSME and was actually a debt-free company and had no loans whatsoever? How do they approach this system? Number two, that I have already been to. Yes, sir.
So your voice, Atul, is not very clear. I'll repeat his point, sir. I'll repeat his point. What he's saying is, if I'm a debt-free company, but because of COVID now I need money, how to get money from the system? That is his point. Atul, on your next point, please, Atul.
The next point that I had, sir, is that I have already approached SBI at the branch level and gone there and talked to them, and they have a very senior branch level person, branch manager, I would say, and I would not like to take his name, has already told me that he has no instructions whatsoever from anywhere. And I have it in writing on WhatsApp.
Instructions for?
For this update on the MSME scheme.
Instructions.
Additional
not
limits.
instructions.
It
is instructions.
Okay. No, instructions for what? For implementing the the new package, or you're talking about
implementation of the new package. Implementation of the new package. The third request, sir, which is as I said, I will not take more than 1 or 2 minutes, Manoj. Third final request that is there is, sir, that I'm part of the skilling industry, Like at one time, the banks gave the hotel industry or the hotel business, and they called it and turned it into an industry, gave it the clause of industry. I would request that since the skilling industry today is the Prime Minister's prime, one of the prime policy schemes,
Campaign.
the skilling industry should also be given industry status, and especially because of the one reason, that when we go to the bank says that the skilling industry is actually on the negative list, which is very surprising. You know, the training industry, skilling industry, even for opening a bank guarantee, they ask for 200% margin.
Okay. Okay.
Mr. Subhash Agrawal sir has raised a point. He's saying this additional 20% limit is being given to MSME up to 100 crore turnover. What will happen to people who are above 100 crore turnover? Can State Bank have some scheme similar what is being given to MSME, because it can be given to even larger people? Is there any possibility that there can be some across the board 20% can be given to other borrowers? Okay. The next point, which has come from another questioner, I'm just reading the points which has come to me
sure.
from various parts of India.
Yeah.
They're saying trust and faith between lender and borrower is very important. How to build that trust is a very important thing, that borrower can have a trust on the lender and lender can have a trust on borrower based on your experience. They are looking for guidance. So the next point is that you are asking for future projections. Future itself is uncertain. How to make future projections is a big question before every CFO, every entrepreneur. That's another big issue. Then, sir, can the past, the suggestion from that side is, can the past track record can continue to the basis of funding rather than talking of future is uncertain?
There's some disturbance in the audio.
And they're saying that everything with end use is being monitored. Can we get some corporate loan where end use structure is not there? You can see the security, you can see the cash flow, but don't get into end use where it is the money is to be every time may not be possible. Then I think one Mr. Vinmar, he's a borrower from India.
Vinodji, there's some disturbance in your voice.
In spite of 20%.
Vinodji, there's some disturbance in the voice. If you can pass on the message to me or to Mr. Gadia, I think that would be better.
Yeah, because
So I think Mr. Gadia ko request karu. Mr. Gadia, aap baat rakhe.
Yeah, you can pass on the message to him.
Gadia ke baat, Mr. Jyoti Prakash Gadia, our co-chair.
Yeah, I know him very well. I know him very well.
Gadia, please take over.
We were on a panel together in Calcutta, so we know each other.
Yeah. So you have to unmute Mr. Jyoti Gadia.
I don't know whether he's frozen.
I think even his line is also blocked. So you can send the message to me. I'll repeat.
Yeah. He is frozen.
Yeah.
I think we lost the link.
Yeah, Jyoti has lost the link.
Vinodji, you can send the message to me.
Yeah. Everything was.
I think it is there on sir, on the chat. It is there. Can you hear me now better?
Some disturbance in the audio now.
In the chat window.
I think if others can mute, people who are not speaking, possibly then they will see this that problem doesn't come up.
Sir, I would suggest you respond to the points you come so far.
Yeah, so if anything comes later.
I think you can respond to earlier questions, and then maybe his connectivity.
Yeah, meanwhile something comes, other point comes. I'll.
Perfect.
I think Jyoti Gadia ji has joined.
So I think we'll take what Mr. Sanjay Bhatia points that he had raised. Deferment of term loan installment. I think extension of moratorium is what we were talking about. I think that option is available. I think you just have to contact your bank, branch, and they will extend it to you. So it's a very simple process. And if you have not received the communication, you just need to contact your branch. You talked about additional limit by way of WCTL. The problem there is the more TL or FITL, then it talking about restructuring. Okay, which is something which the current guidelines do not permit. So FITL and WCTL will come into play when we have talk about the one-time restructuring. I think we'll have to hold on to this for some time. So WCTL effectively means restructuring. Again, you talked about delayed receivables. So I think this is exactly the whole purpose of readjusting the margin, and it can only be done provided you increase the cover period of your receivables, reduce the margin on your stocks or your finished goods. Then only your DP will work. So this is the basis on which we have done it. Okay, so I think all that you have to do is say that yes, my receivables are still receivables where I will recover the money. There is a delay. So instead of getting it in 180 days, I may now get it in 270 days. So you'll have to make that request, and I don't see any reason why your branch will not consider that. Okay, so with SBI, you can offline just let me know, and I will make sure that this is looked into. So I think these were your 3 points. Then you talked about LCA, the original documents. I think possibly during the lockdown phase, you would have faced this problem when your original documents could not have been shipped. But I think now with the courier service being restored, so I don't think this is that this will be relevant any longer. So I think this was something which IBA should have sent out a communication that banks, as a one-time measure, should have accepted the scanned documents for negotiation under the LCs. So if you still face this problem, then you please share with me offline.
Okay, sir. The only thing is that many zones are still in containment or red zones or something like that. So that is why these issues are there. Okay,
if it's with SBI, you can let me know. Okay. We'll try and find a way out. Because if the acceptance comes, if the the LC opening bank is giving its acceptance based on the scanned documents, okay, and the negotiating bank can undertake that as soon as the courier service is available, they will ship the original documents. I don't think that should be an issue. So this is something which has to be worked out between the banks.
Thank you.
Then Mr. Tani talked about rate cuts, especially talking about the APIs. I know that this is one area which is a big concern, given our huge dependence on imports of API from China. I think my last interaction with some of the companies, I think they were talking about moving to other countries like Brazil and all, but I don't know where things stand. I think if you develop an API manufacturing here, and you think there is a good scope for exports, which means you have natural hedge, which means you're not taking a foreign currency risk. In which case you can actually think of borrowing in dollars, foreign currency, whether it is euro, Japanese yen or US dollars or this thing, whatever is appropriate, so that you actually borrow at international rates. So this is one advice I can give you, that we can actually look at if you have a natural hedge, so that whatever if you have any import component, then that is offset through your exports, which means you don't take a currency risk. In which case you can actually borrow at the international level, LIBOR linked. Okay, so this is a suggestion that you can consider, and maybe this can be worked out through your industry body and this thing, so that everyone who was possibly an exporter can be extended, funding at the international rates. So LIBOR linked pricing. Okay, so I think this is one way of overcoming this problem. Then you talked about personal guarantee. So I think personal guarantee, there are no laid down instructions, whether by RBI or by banks. Okay, and especially if there is a strong track record, a credible track record, and a clean track record, I don't think this should really be an issue. Okay, so personal guarantee, and especially for somebody who has a 5,000 crore limit, how can he extend a personal guarantee? So asking for a personal guarantee is, I don't think that really is a practical approach. So I think whichever bank is insisting on a personal guarantee, I think you'll have to escalate it and take it at a higher level. And as long as your business, your financials, your track record are strong, I don't see this being a hurdle. Okay, and you talked about the collateral, that if you have a asset which is valued at 100 crore, so obviously I think why should you offer a collateral which is of such high value? Okay, you should only offer a collateral which is, or we should keep this for, you should say that this collateral should also be used for my future borrowings. So you shouldn't be asking me for fresh collateral, when my borrowing goes up. So I think each case will have to be looked at it, in a different way, and will have to be structured. Okay. So I'll be more than happy to give you my personal advice, offline, if you come across this problem. Coming to, Mr. Khetan's points, business, I think this has already been rolled out for opening of LCs. So I don't know whether anybody has approached you. So for opening of LCs, business is already rolled out. We are currently, so let me also share, we are currently in the pilot phase. So we are just testing it out. So if you want to avail this, facility, I can, ask somebody to get in touch with you, and we can also, onboard you for this pilot run so that we can test. Okay. So, but in any case, in the next, I think 3 months, it will be rolled out fully. I think we'll have to onboard. So the business, with much more features, including LC opening, your bill discounting, negotiation of documents, everything can happen through this business platform. You talked about the credit emergency lines of repayment schedule. Again, any alteration in the existing repayment schedule other than the extension because of the moratorium. Okay, so suppose now there is a 6-month moratorium, so automatically your repayment date gets shifted by 6 months. So anything other than that is not possible unless until the deep restructuring option is provided. Okay. Now you talked about the expected cash flows and you talked about the uncertainty. So I think what we are suggesting, and we are also working with number of companies, is for this year at least cash budget based lending. So while the projection may be a little difficult to forecast and prepare, I think a cash budget based on a very conservative estimate can be prepared. I don't think that is going to be difficult. And we are actually working with several large corporates, and we are providing them support based on the revised cash budget. Okay. And let me also share that our approach and plan is to move from this assessed bank finance method to a cash budget method in the very near future. So we would be more than happy that if you can drop your cash budget based on very strong assumptions, then it is much easier for the banks to consider extending the financing support. So I think for this year, if you can prepare your revised cash budget and then estimate where your shortfall or gap is going to be, it will be much easier for the bank to consider what kind of support to provide. Coming to Mr. Mahesh Gupta's point on the deposit. So honestly, I'll have to check with the branch that what is the current provision on the deposit rate. So, but I'll tell you, the banks, when they fix the deposit rate, it has no link with the repo rate. Okay, so it actually is with the MCLR. If I have to cut down my MCLR, how much of this thing on the liability, that I have to cut is something that, and I can tell you that given the fact that we are still seeing a huge inflow of deposits, we are not very happy with the situation because there is no avenue for lending. We do not want deposits to be coming in, despite the fact that we are reducing interest rate. Deposits are coming in very, very strongly. So we have no other option, but we want to slow down that tap because otherwise I take a hit on my margins if the credit offtake is not there.
So the problem is that for a certain value, you give it 5% below 2 CR. Above that, you give 3%. So why are you getting inefficient to the system?
I think this, okay. So I think this could be because of the slab. So I think interest rates are fixed for various slabs. So I'll have to check into it. If you can just share with me offline, then I'll have it looked into.
Sure, sir. Thank you.
Yeah. So Mr. Atul Anand mentioned about MSME, the companies which were debt free pre-COVID. So I think nothing stops you from approaching your bank. If you think that you are otherwise eligible for receiving. Only thing, given the turmoil, possibly you may have to wait for a little more time, till the moratorium and all ends. But I think you can initiate the discussion, with your, whichever branch of the bank that you feel convenient, so that you can. So there is nothing. So there is no instruction that fresh lending cannot be done. Okay. So I'm still, making references to various, officials about connections within my own bank. Then you talked about skilling industry being given the industry status. I think this is something which is within the government's purview, and I don't think in our risk advisory this comes under a negative list. I'll have to really check. Okay, so I've never seen that any proposal coming in from the skilling industry sector or company. So I have not come across any case, but if there is anything that specific reference that you can share with me, I'll have it looked into. Okay, but as far as the granting industry status is concerned, this is of course something which we'll have to take up with the government. And I think given the government's strong thrust and focus on skill building, I think that they would be quite willing to consider this. Mr. Agarwal mentioned about what about MSMEs other than MSMEs. Given them across the board 20% limit. I think across the board may be a difficult proposition, but on a case-to-case basis and more so on the basis of the cash budget. If you can justify your requirement, I think banks will be open to looking at your requirement. Okay, trust and faith between lenders and borrowers. I think that is the fulcrum or the entire basis on which the entire banking industry works. Okay, so I think both trust and faith is built over a period of time. While banks do have some bad experience, but that doesn't mean that trust and faith is completely eroded. Because banks, if they stop taking risks, then effectively they're not doing banking. So I think faith and trust is of paramount importance, and between all stakeholders. And so it's incumbent on the responsibilities of both the industry and the lenders to continue to build that trust, that faith. Future projections, I mentioned that we can work with the cash budget, because cash budget can be prepared for a shorter time horizon, which is much more realistic. And corporate loan, again, we mentioned that when we extend corporate loan, RBI requires that banks have to monitor the end use of every lending that they do. So corporate loan, especially given the nature that at times it could be unsecured, to shore up working capital or your net working capital. So the end use requirement cannot be dispensed with. This is something which the regulator insists. So, and I don't see any reason why it should be difficult for you to explain why you need this, corporate loan support for us. Because the moment you say that, lenders should not monitor the end use, that becomes actually a, red flag. So I think these are some of the points which I had jotted down. If I have missed out anything. No.
I think yes, sir, answered almost all the questions. The time is already up. It is already 6:03. So I think
yes,
I will hand over this proceedings now to my co-chairman, Shri Jyoti Prakash Gadia, because he will give his concluding remarks as well as conclude the session.
No, just if anything has been missed out, I can take it offline. Okay.
Yeah,
absolutely. I think we'll work out. Sir, we'll work out some connect points through your office.
Sure.
Through your secretary, we'll work out some connect points. Sir.
Yeah. No, I'll advise you. Don't worry. Yeah.
But we have got such an absolutely perfect coverage of all our queries, sir. We are really
very comprehensive.
Very comprehensive and all covering view.
As I said, learning exercise for me, learning process for me.
No, but it was very comprehensive. Very, very thankful.
Very comprehensive.
No. Thank you so much. Thank you.
So, Binod sir, it was absolutely delight to have the everything under you, sir. It was one of the finest discussion we had, wherein we could discuss freely and frankly all sort of issues. Thank you, Varma sir, you were as usual brilliant, sir. Each and every word you spoke clearly demonstrated your experience and hands-on approach. I just want to tell all our friends here that you will be surprised to know that Varma sir is a very good singer too. So I just wanted to, yes sir, and definitely Varma sir, and sir, in case if anybody wants to follow him, you can go to that app of that music, and then you can also follow his. I think every week Varma sir आपका एक ऐसे गाना वहाँ पे आ जाता है sir, and he's brilliant that way.
आपने पहले नहीं बताया तो हम तो पहले
इनसे गाने वाला काम नहीं करवाना चाहिए था वर्मा सर से. सुजीत भैया.
Also share that I've been living alone for the 4 months. My wife is stuck in New York.
Okay.
Oh, so that is so
That is
sorry,
a
your
secret
music
handle.
demonstrated that, sir.
Can you name the tab,
Secret
Jyoti ji?
handle.
Jyoti ji, app का नाम बता दीजिए.
Sir, Star Maker.
But he's already a
Star
star.
Maker app,
But he's
and
already a
definitely,
star.
sir.
But
He's already a star,
yeah.
sir.
I have to find
Sir,
avenues
just
to
one.
keep myself entertained.
Sir, I just wanted to highlight some of the few points which we have discussed, sir. Some sectors which may not be the blue-eyed boy of the bankers right now, like real estate, auto ancillary, hotels, sir, it requires sympathetic approach, and it will go a long way in the nation building process, sir. This is one thing, sir. The rating downgrade will be a common phenomenon this year. Bankers and corporate need to properly equip to deal with this issue, sir. The third, I think it is the long-term financing, sir. Just wanted to see that 8 out of top 10 commodity has fluctuated by around 70%. The prices has fluctuated around 70% this year. Appraisal, reassessment of long-term loan need to be relooked at all these points, sir. At the end, the sheer size and the number that SBI brings in, the banker to every Indian, the country will progress and achieve the real goal if SBI lends a helping hand. So we always look forward for all the help, support from SBI, and as always, we are also getting it too. Thank you, PhD, all these supporting staff, everybody all present here, Agarwal sir, Binod Jain sir, all the past president, everybody, I would like to thank you with the core of my heart. All the effort which has been taken to bring this into a huge, successful thing. We had more than 2,000 people in the Zoom and the YouTube people coming and attending it. And we had a lively questions. I just want to thanks once again, everybody all present here.
Thank you.
Thank you so much, Verma sir. Thank you so much.
Thank you, sir.
Thank you so much.
Thank you, everybody.
Thank you. Thank you.
Thank you, sir.
Thank you, Verma ji. Thank you very much.
Thank you. My
Thank you,
pleasure.
Verma sir. सर आपका एक गाना एक ड्यू रहेगा सर लास्ट में भी.
हाँ ठीक है पक्का. तो जब मिलेंगे अगली
Thank you,
बार.
Verma sir. पक्का अगले बार Verma sir.
Thank you so much. Thank you.
Thank you, Verma
Thank
sir.
you.
All the best, sir. Thank you, sir. Bye.
All the best.
Thank you, sir. Thank you,
Thank
sir.
you.
Bye.
Thank you.
Thanks everybody for joining. Thank you very much.
Thanks, Binod sir, for